Okay, so in this video, I'm going to show you another setup that you are going to use when you enter in the market. Now, the pattern that we're going to use in this video, this is the main pattern you are going to use. So whatever you pay for this course, this pattern right here will pay you back. And the pattern that we are going to use is called a 1, 2, 3. It's a very simple pattern, right? So let's say that the market is going down, right? The market is going down, right? So, and this is the moving average, right? Now the market is going back up towards the moving average, right? It pulls back and then it tries to go up and make a new high, right? But it can't. So, this would be number 1, and this would be number 2, and this would be number 3 right here. Now, if the market can't make a new high, usually that means that the market is weak. So if the market pulls back to number 2, you will sell when it breaks this low point right here. So when it breaks, you will sell. And usually when you have this 1, 2, 3, especially in the bear market, the market will continue to go back down in the same direction. So let's go to the chart and I will show you some examples. Now, this is a good example right here. We have the market was going down and pulled back to the EMA. The market is going down and it's pulling back to the EMA and pulled down and tried to go up to make a new high, but it couldn't because it's so weak, and then we went right back down. So this would be number 1 right here, right? This high right here. This low right here would be number 2, and this would be number 3. Now, as soon as price goes right down to number 2, this is where you want to sell. And I will show you stop losses and profit targets later on. So let's go to another example. Actually, right here, this is a smaller one. You have a 1 right here, a 2 right here, and a 3 right here. See, the market tried to go up, create a new high, but it couldn't. And then as soon as it broke number 2, this is where you enter in. If you notice, we have a bigger one right here, right? The market was going up, went down, went up, and went back down. And I drew this a little bit too high, but if you notice, the candles never went up to the high. So this would be number 1, this would be 2, and this would be 3. And the market went back to 2 and broke it, and then it continued to go back down. But you would be in this move right here because this is a smaller one. And I'm going to show you that sometimes we'll be taking these smaller 1, 2, 3s. So let's give you another example of a 1, 2, 3. This is actually a good example right here. And this actually hit the trend line. So this is a very good trade. Now, the market went up close to the EMA, went down, and went up and tried to make a new high, but it couldn't. And then it went right back down. So this is 1, this is 2, and this is 3. And as soon as it breaks 2, that's where you want to enter in. And most likely, like I said before, usually patterns are very good when it comes to the bear market, and especially the bull market too. And you will see in section 2 when I talk about how to go long, I talk about 1, 2, 3s too. So now I actually want to just go back and show you a smaller 1, 2, 3 because sometimes the market won't give you a decent 1, 2, 3. It gives you these small 1, 2, 3. So if you notice that the market went down and it went up and it went right back down. So you can actually enter in right here if you wanted to. If you want to take these smaller ones, you can do it. Now, if you notice that this market went here, went up, you could have took this one right here. And there's another smaller one. That's why I said you have to notice that the market went up. It tried to make a new high right here, and it went right back down. So this would be 1, this would be 2, and this one would be 3. So these are the smaller ones, but they do happen. So you have to make sure that you understand that these smaller ones are considered 1, 2, 3s too. You have another one right here, a small one right here. 1, 2, 3. But this is not really, it's very far from the EMA, so most likely you wouldn't take that trade. Then you have small one right here, 1, 2, 3. Took this one and it went down a little bit and actually went back up. So those are the basically the little 1, 2, 3s. Then you have the bigger ones, and you know what we discussed before, like this 1, 2, the obvious ones, right? 2, 1, 2, and 3, and then basically you enter as soon as it breaks this 2 point right here, you are in the market. So those are the trades that you want to start off with. Those are the setups that you actually want to start off with. And those setups are very good, especially in a bear market. So where to exit, where to enter, and the risk reward and different things like that. So I will see you in the next video.